get going, welcome everyone. Thank you so much for being here. Thank you so much for joining me on this Wednesday evening. Before we dive in, I want you to just pause and think about something. Right now, you're successful. You're either building the career of your dreams or you've already built it. But I want you to let me ask you a question. What if your professional success could be the springboard to true wealth, not just a source of income? As we go through this webinar, that's what I want you to think about. And what I'm about to share with you today is exactly how busy professionals like you are generating $15,000 to $18,000 yearly from each $100,000 investment. And that's without sacrificing their professional success. So my question is, what strategies are in place? And that's exactly what we'll talk about today. But before we jump in, please put your questions in the question section, or even in the chat. I would love to answer all your questions at the end. Now, finally, before we dive in, I just want to take a moment to address something really important. You know, as accomplished professionals, you understand the value of thorough due diligence in anything that you do. So the information that I'm sharing with you today is exclusively for our guests. And while I'm really excited to share these opportunities, I want to encourage you to review them with your trusted advisors, because that's what we sophisticated investors do. Due diligence is very important. So I want to give you permission to do that. So now let's get into what really matters, which is why you're here today. But why does this matter so much to me? Because I've lived it. As an ER physician, as a busy professional, I know exactly what you're experiencing. You know, I understand those endless shifts that like blur together. I understand the emotional weight of the critical decisions that we make. I understand the constant pressure to see more patients, to see more clients. And I understand the exhaustion that follows you when you get home. And all of that I get, but what really kept me at night was that despite my income, despite the prestige, I was still trading time for money. Every dollar meant more time, more hours, more shifts, more sacrifice. And that's when I realized that my medical training, although I loved it and it taught me to save lives, it didn't teach me anything about saving myself from burnout and from financial dependency. And that is why I'm here today, because you deserve more than just trading your life for a paycheck. What else is out there? Let's talk about something that we know all too well, and that's the never-ending 9-to-5 cycle. You know, except for us, it's rarely 9 to 5. You know, it's waking up really early in the morning. It's the late night calls. It's weekend on calls. It's, you know, the missed family dinners. It's the "I'll be there soon" text messages to our loved one. It's the exhausted hello to our spouses. And it's the "I'm sorry, I can't make it" calls. But this is something that nobody tells you, is that the more successful you become, the tighter this cycle takes a grip on you. You know, we've been conditioned to accept this as the normal, to believe that this is the price of success, to think that this is the only way to build wealth. But I'm here to tell you today that it's not. And here's what most professionals miss, and I want you to get this. Your career, your expertise, your income, it's not just a paycheck. Think about it as seed capital for your future. You know, think about this. While you're busy crafting, you know, while you're busy like really perfecting your craft, while you're earning at the highest levels and building your professional reputation, you're creating the perfect foundation for something bigger. And when you leverage that seed capital the right way, you're no longer just investing in properties, you're investing in your future. You're designing the life that you really want. You know, you're creating the freedom that you really deserve. I want you to realize that this isn't just about investing money. You have to now understand that this is about investing in you. And that is the first challenge that you really need to overcome. In a world that's dominated by institutions and giants, it's really, really easy to feel very small. It's easy to think that the opportunities are gone, that it's easy to believe that like you've missed your moment. But this is what I've discovered is that while others see a crowded market, the curious ones, the determined ones, we see pockets of opportunity everywhere. And it's no longer about just following the crowd. It's also not about even asking for permission. It's now about claiming our space. It's about creating the path, building that legacy, because the world is not going to give you your place. You have to create it. You have to create it. I want to share something personal with you that changed everything for me. I worked for a private equity firm during COVID. And if you remember that time, I remember those times really well. But while we were putting our lives on the line in the ER, I watched something disturbing start to unfold. I watched loyal physicians, my colleagues, my friends, my work family get fired. And just like that, dedication meant nothing, experience meant nothing. And that's when it really hit me. No matter how good you are at your job, no matter how many lives you save, no matter how many hours you put in, you're still just a line item in someone else's balance sheet. That moment for me, it wasn't just a wake-up call. It was my call to action. I realized that at that point that I wanted to help professionals take control of our own financial future. There's a reality that most professionals don't see. And these numbers on the screen, they tell such a powerful story. The top 1% control nearly 1/3 of America's wealth. And then the top 10%, they control almost 60% of everything. Just think about that. And even what's more interesting is that it isn't just the ultra wealthy anymore. It's about those who understand how to build and preserve wealth. While most Americans, even like high income professionals, are still stuck trading their time for money. But the wealthy they're now using a lot of proven systems to start to compound their wealth. So the question isn't whether you can join that 10%, because I know you can. The real question is, are you ready to learn their playbook? Like learn from their playbook, what they're doing, what's making them different? I think that's the bigger question. Now, let me show you a little bit about what's happening in real estate. So I want you to think about these numbers again. So 40% of multifamily properties have all gone to corporations, and $47 billion were invested just last year. That's over 200,000 units that were acquired by just 3 institutions since 2022. Let those numbers sink in. But if that doesn't kind of bother you, here's what really should concern you is that these giants, they're not just buying property. They're paying like 20 to 30% above market value. And why would sophisticated investors overpay? And I'm not advocating for overpay, but is there something that they know that we don't know? They're not just buying buildings, they're buying control of their future wealth. That is the most important thing. Again, you might be thinking, the question is like, will this trend continue? I don't think that's the question that you need to be asking. The question is, will you watch from the sidelines, or will you join the right side of the equation? This reminds me of one of Warren Buffett's famous wisdom quotes. And he said, be fearful when others are greedy, and be greedy when others are fearful. And right now, while most investors are paralyzed with uncertainty and fear, these large institutions, they're quietly accumulating properties. And they understand exactly what Warren Buffett has always known, which is the best opportunities, they come when others fail to move. I repeat it again. They're not just buying property. They're buying tomorrow's wealth, but they're buying it today. Why aren't we doing the same thing? Here's another thing that a lot a lot of professionals don't see is that while we're so focused on our careers, the institutional giants just systematically building empires. But I'm excited to say that something has shifted. Something is shifting. We now understand their strategy. At Pheenyx, we are uniting professionals to do what the giants have always done, which is identify premium properties. We need to pull our resources together, and we need to start building lasting wealth. Us busy professionals, we deserve more than just trading our time for money. And that is why we created Pheenyx. It's to give you the same advantages that institutions have enjoyed for decades. So when people say, wait for the perfect time to invest, ask yourself, who is profiting from that statement? Who is profiting from that hesitation? While others are watching from the sideline, we have started to create our own opportunities. And this time, wealth isn't flowing to the giants anymore. It's building prosperity and true wealth for professionals just like you and just like me. Now, I want to show you exactly what we're seeing in today's market to just give you some excitement. Interest rates. You've been hearing in the news what's been going on with interest rates. So there was a Fed funds meeting that happened in September and another one that happened in November, a few weeks ago. And the trajectory is clear. The Feds they're cutting rates. And we know what happens right after that, right? So as rates start to drop, the property value tends to start rising. It tends to start increasing. And it's a pattern that we've seen. We've seen it over and over and over again. But there's more to that story, right? It's not just interest rates that are dropping, but there's an even bigger story. And you start seeing a little bit that like global tensions are now cooling. So if you look around, if you look at in Asia and Europe, there's this growing push for stability. And then, history will show us what follows. And is that as international capital starts flowing back into the US, especially into like stable income producing properties like multifamily communities, and multifamily means apartment complexes, then we start to see that the writing is on the wall. And the question is, will you be positioned to benefit from what's coming? That is why we need to be ready. That's why we need to be, educating ourselves. That's why we need to know what's going on out there. So to kind of put it together, multiple rate cuts have already happened and are projected to happen. Institutional capital is returning, and then the giants are positioning billions. I'll say it again, the writing is on the wall. The major players, they see it. And now we also see exactly what they see. So it's not about waiting for the next big real estate wave, because I think we're already in it. The moment to take massive action is now. This is our moment. And how do we do it? We do it by acquiring premium multifamily apartment properties in high growth markets, but we have to do it together. Have you ever thought, why are they buying apartment complexes, or why are they focusing on apartment complexes? I want to help you to understand risk and stability. So when you invest in a single family home or in a rental home, you're gambling on just one tenant. If they leave, your income goes from whatever it was to zero, just like that. But then this is where it gets interesting, right? At a property like Grove Park View with 268 units, each tenant represents just a fraction of your income. So if one tenant moves out, it barely creates a ripple in your returns. Think about this, right? During some of the biggest market crashes of our time, the 2008 housing crisis, COVID shutdown, multifamily properties, they remained above 90% occupancy. Now you might be thinking, okay, that sounds great, but like, how do we as busy professionals, how do we access these opportunities, right? And this is where it gets exciting. We can access them through like collective investing, right? We can acquire these institutional assets together. And and we're not just buying any properties, right? We're coming together and we're buying those kind of properties that have historically weathered through every economic storm. the giants, the institutions, they've been doing this for decades. Now is our turn. During the darkest days of COVID, a lot was happening, and a lot of you guys remember those times, but it just seemed like the whole world was collapsing around us. The stock market was crashing, businesses were shutting down, even like real estate investors were panicking. But something kind of cool was happening in apartment housing and multifamily investing. Luxury properties, they sat empty because they're too expensive. Office buildings went dark because no one was going to work. And small landlords, they also struggled to pay rent. But multifamily told a kind of different story. The thing is that it's a basic human need. And so people always needed a place to live. But we also noted that like rent collections, they remained decently strong. And then income also stayed very stable. This wasn't luck. This was the power of, having 100 plus units instead of one, having multiple rent checks instead of just a single tenant, and then also having steady cash flow, even in chaos. And then we also saw that the property values still held really strong. So that's when I truly understood that multifamily real estate investing wasn't just another investment. It almost felt like a fortress in uncertain times. And that's why it's an investment opportunity or, asset class that we really like and focus on at Pheenyx. So, what if your money worked just as hard as you, right? What if you had financial freedom that wasn't just earning money, but that your money was really working for you and it was working around the clock? And then what if you also had time flexibility and you chose how to spend your time? All of this isn't just theory. This is how they built wealth for decades. And really now is your turn. You stack on what you already have and you keep adding to that. So I got really excited because I wanted to kind of just tell you how we need to strategize and the part that we need to play. But let me pause and introduce myself. My name is Nkem Ezeamama. I'm an ER physician, and I'm glad to be here with you guys. You might be thinking, why Pheenyx? What makes us different? And I want to be candid as I can with you. I'm not just another real estate investor. I'm a busy professional who has walked in your shoes. Me, as an ER physician, I know exactly what you are experiencing, what you've experienced. I understand the long hours, the demanding careers, the search for something more than just trading your time for money. So, and I'm not here because I failed in my career. On the contrary, I'm really here because I think I discovered something beyond my career, which is a path to financial freedom that works alongside my professional success and my professional endeavors. In the last 2 years, we've built a $46 million portfolio, and that's through acquisition and partnership. And we're really proud and excited because this is just the beginning, and there's still so much more to come. I am grateful for all our investors who have been with us from the start and who continue to join us in every investment opportunity that we present. And as we continue to grow, it's very humbling and exciting. And like I said, there's still so much more to come. But let me share with you what truly drives us. We're not just helping you to invest. We're transforming really how busy professionals build wealth. And that's because your expertise should not trap you. It should actually free you. And because this isn't just about today's return. We're not thinking about just today. We're thinking about building something that lasts. That's what it's really about. It's about building a legacy. And that's why I'm really excited to share with you our current investment opportunity, which is Grove Park View. This is an opportunity that our entire team has been really excited about. So it's 268 units. It's on 19.6 acres. And I want you to pay attention because I want the numbers to speak for themselves. Like how I'm about to tell you that it's 96% occupied. But these all sound like really impressive statistics. They're indicators of something that's really bigger. Something that we saw immediately as soon as this opportunity crossed our desk and we started reviewing it, we started underwriting it. We saw something bigger because while others saw just another apartment complex, we saw what this property is really positioned to become. And that's what I want to share with you. So what was the first thing that caught our eye? The first thing that caught our eye was the location. So it is in Stone Mountain in Gwinnett County, but this isn't just another Atlanta submarket. Gwinnett County is poised to actually be the largest county in Georgia in the next 5 to 7 years. This is a location that checks all the boxes from a strategic checklist. The children who live at Grove Parkview, they can attend Parkview High School. And this is like one of the top performing high schools in the Atlanta MSA. And it has a rating of 8 out of 10. Another thing that's so key and so important is that there are major employers that are about 15 minutes away. So that means for you as an investor thinking about it, that means that it's stable. They're employed tenants. You know, some of the employers are healthcare, tech, manufacturing. But then what really caught our attention is that there has been very limited new construction in the area. So you're like, well, why does all of this matter, right? Because when you combine strong school district, easy access to jobs, and a restricted new supply, you get something that's really, really powerful, which is sustained demand. I want to tell you something that's like really fascinating about the resident profile. When you have great schools like Parkview High School nearby, something special happens. You know, we don't just get tenants anymore. We get families, we get professionals, we get people who are investing in their community. And this isn't just theory. I told you that we are 96% occupied, and that tells a story. We pulled out some data sources, and one of them is the Atom Data Solutions, which studied 20,000 zip codes in 2023, and they found something really remarkable. They found out that the properties nearby quality schools, they maintained a 12% higher occupancy. They also noticed that residents will stay 23% longer in top school districts, and then the game changer is that the property value appreciates up to 35% faster. So think about what that means. More stable income, lower turnover costs, stronger appreciation. And it's all because families are choosing to build their lives here. I hope you're getting just as excited as I am. This is also something that's interesting that I think that I want you to kind of pause and pay attention to. Is that we identified, and I want to kind of share with you our business plan. So we identified 105 units that were ripe for transformation. And the beautiful part is that, like, we're not just guessing the results, right? The current owner is already proven the model. So our business plan is something called value add. So we go in and we renovate units and we create better living conditions for our tenants and thus increasing the value of the property. So look at something that's happening right now. At Grove Parkview, the current owners, they are seeing anywhere between $115 to $410 additional rent per unit per month that has been renovated. And that looks like 65% return on renovation investment. And these upgrades are getting completed in less than 30 days. But if all of that was like, okay, What really, really caught our attention was that like they aren't just projections, they're actual results. We are seeing now that these renovated units are leasing in just under 7 days. No incentives are needed. So we don't, we don't do like concessions to give free months. People want to move in. And I think the most telling story is that there is actually a waiting list. I keep telling you to think about this because I want to walk you through the story and the journey of how we got here. So now you should be understanding that like we're not hoping that the numbers work. We're seeing them work right now. We're seeing them in real time. And we know that we can continue on that execution plan. So to pull kind of all the pieces together, think about what we have here. We have a location that attracts long-term tenants because of its amazing school district. We have a renovation strategy that is already working, and we've seen that in play. 96% occupancy right now, and there's a clear path to increasing value. It's not speculation anymore. And this isn't just us hoping for appreciation. This is truly what an institutional quality asset looks like, and it has multiple proving ways that we can grow your returns. The fundamentals of Grove Park View are very strong, no questions asked, and that's really what I want to share with you tonight. I want to pull back the curtain a little bit and just help you and really show you how we analyze these opportunities on a high level. We don't just run our own numbers, right? We pressure test them against CoStar, which is the industry's most trusted data source. So in order to figure out the value of the property, it's dependent on two factors: your net operating income and your cap rate. And so the formula is actually value is equal to net operating income divided by the cap rate. So the net operating income, real quickly, is income coming in and expenses going out. And what you have left is your net operating income. So in order to increase your net operating income, because it's in the numerator, you would increase income, which we're doing by value add, and you would decrease expenses, which we're doing by really good management. And I'll talk to you about that. But then the cap rate is in the denominator. And the cap rate, the easiest way I can explain it to you is just, it's a metric that we use to estimate the potential return on investment of the property. So here's what's fascinating about our projection is that while CoStar is projecting a 4.6% exit cap for this submarket, we're actually using 5.3 in our calculations. What does that mean for your investment, right? Like, what are all these numbers? When we use our conservative 5.3% cap rate, your investment could multiply by 1.78 times to anywhere from 1.9 times. If we use CoStar's numbers, their projected 4.6% cap rate, that same investment could reach 2.8 times what you invested, anywhere up to 2.34 times, 2.18 to 2.34 times. And that difference isn't just numbers on pages. It is our commitment to underpromise and to overdeliver. And that's really what we stand for here at Pheenyx. These projections aren't just wishful thinking. I've told you before, and I'll say it again, the numbers tell a real compelling story here. So since 2020, the submarket has seen significant rent growth, even during a pandemic, even during uncertain times. So through every market cycle, up, down, the submarket that we're in, that Grove Park View's in, has maintained a 95% occupancy. That's not luck. That's fundamentals. And if all of that wasn't enough, what really seals the deal for us is that like new construction in the area is actually declining. So when you think about it, you have growing demand and a limited new supply. All of that is in our favor. I want to show you what's happening in the submarket. So kind of picture the perfect storm, right? You have 0 new apartments that are being built within like a 3-mile radius. And then you have the existing properties that are packed. And by packed, I mean that over 95% occupied. And then you have the population surging 12% in just 4 years. And I told you that it's going to be the largest county within the next 5 to 7 years. All of that isn't coincidence. It's just simply economics 101 that's playing out in real time, and we are getting to see it. So you have growing population, you have a limited new supply, and then you have maximum current occupancy. When all these factors start converging together, we're not just looking at market data anymore. We're literally watching a rent growth catalyst form. And that is why we are really confident in this opportunity. It's not because of like all the optimistic projections, and it's not really because of market hype, but it's because the fundamentals are undeniable. There's no questions asked, and I've proved that to you. So even with our conservative assumptions, even with, if you think about like planning for like any type of market shifts, even with building room for uncertainty, things that we don't see coming, like another COVID, the numbers still tell a very compelling story. So now I've told you the numbers. I want to make it a little bit tangible for you. So what does a $100,000 investment in Grove Park View actually mean? What does that? Break it down. So that looks like $15,500 to $18,000 every year. So while you're working hard in the office, while you're seeing patients, while you're in surgery, while you're living your life, while you're traveling, you can still be making that. So every quarter, you're going to be getting around $3,800 to $4,500 deposited in your account. And that's not hoping for like stock market gains, right? That's also not waiting for the perfect exit. That's real income that's starting to flow down to you. And we're talking about a 15.5% to 18% annual return. And if you look at the S&P, has historically delivered anywhere from like 7 to 8%. So these aren't empty promises, right? They're based on what's really happening right now. I'll say it again, 96% occupancy, a renovation strategy that is already working. We've seen it, we've proven it. And then we have significant rent growth that has happened since 2020. But of course, there's still more, right? It has to be. And then think about the tax benefits that actually make these returns more powerful. That's the part that really gets me excited. I want to share a secret with you about how the giants build wealth. I've shared with you that it's not just about their returns. It's also what they know about the tax code. So when Blackstone, when they're acquiring properties, right, they're not just buying real estate. They're really accessing one of the most powerful tax advantages in existence. And what does that mean for a Grove Park View? So your $100,000 investment can generate about $27,000 in tax savings in the first year. So again, I want you to do a lot of thinking tonight, but the same tax strategies, the same wealth building tools, the exact same benefits that the giants use, we get access to that. So while they need billions to do this, you can do it with 100,000. You can do it by coming together, and we can acquire properties exactly like Grove Park View. So once again, I'm all about adding everything together in summation, but it looks like 15,500 in anywhere from 15,500 to 18,000 in annual returns. Now you can stack on the $27,000 in tax savings in the first year. If you put that together, that is about a 42% total benefit in just year one alone. This is how we've designed the investment to work, and it kind of differs in terms of whatever wealth building goals that you have. So we have created 3 distinct positions, each one with its own strategic advantage. So the first one is Class A, and that's almost like the security position play. That is a $100,000 minimum, and it's a 10% preferred return. So you are first position on the cash flow. As soon as we pay debt, the first returns come to you, and that's 10% before we as the ownership group get anything. You get your 10%. And this is perfect. You might be thinking like, will this work for me? This is perfect for those investors who prioritize really predictable, protected returns. Then Class A is for you. Then we have Class B. Class B, you could look at it as the growth position. The minimum investment for Class B is $50,000, and it's about a 6% preferred return. And then there's an 80-20 split that's above the preferred return. And that's 80% profit share that goes to you, and then 20% that comes to us. And this is ideal for building wealth, which gives you steady income now, but then there's significant upside potential. And then you have the third class C, which is the power position. So this is $750,000 minimum, and you're getting a 7% preferred return, and the split is a 90-10 profit split. This is designed for, the sophisticated investors that really want to maximize their wealth building strategy. This is not just like a random structure that we put together. This is exactly how institutional investors, this is how they design their positions. And we have made it really simple and very accessible to professionals just like you. The question, as you're looking at this, the breakdown, it's not which one is best. You should be asking yourself, like, which one best aligns with my wealth building goals? Which one aligns with where I want to be in 5 and 10 and 15 years? That's how you need to be thinking about it. This is how we've protected the investment. So we have locked we're locked in a 5-year fixed blended interest rate of 4.74%. Think about what that means in today's market. While other investors are paying 6% or more for commercial and 7, almost 8 for residential, we have secured a 4.74% fixed interest rate for 5 full years. This isn't just about saving money. It's about certainty. So there will be no interest rate surprises. There'll be no refinancing worries until 2029. And then we have over 1.25% advantage versus market rates right now. So this is how you should think about it, and this is kind of where it gets interesting is while our debt structure really protects our downside, the location, particularly, the school district, that's what secures our upside. And that's what makes the deal even better. A few slides back, I told you about the Atom Data Solutions that studied 20,000 zip codes in 2023. Well, Zillow also did their own research, and they had a kind of a fascinating story to tell, is that parents don't just prefer good schools. They will pay anywhere from like 18 to 22% premium just to get access to those good schools. And then they stay, which is why these properties maintain a 94% occupancy during school years. But of course, we found another source that really confirms our thesis. So CBRE, their 2023 multifamily apartment report, it showed something rather remarkable. It said that properties in top school district, they maintained a 95% occupancy, not just in good times. So not think through 2008, through COVID, through every market cycle, they maintained a 95% occupancy. That is why Grove Parkview isn't just another property. It's a rare combination of strategic location, protected debt, proven demand, institutional quality. And as I'm going through the presentation, if any question jumps out at you, if there's something that wasn't clear that I said, I definitely will make time for some questions. So this is our magnificent team for Grove Parkview. And I want to introduce you to the powerhouse team that we have assembled. We have 3 amazing strategic partners, each of them bringing something specialized expertise to the table. We have Excite Capital, and it's made up of Dr. Julius Oni, Leslie Awasam, and Tenny Tolafari. And these gentlemen are, they started off as mentors, became friends, and now we're partners together. They have taught me everything that I know. I started investing in their deals, and now we are partnering together with a common mission. Like, how amazing is that? And then Chris Lento with EM Capital. Chris has 21 years of just like focus purely on multifamily apartment complexes. He is a wealth of knowledge. and he has done over $800 million in transactions. He is our acquisition and asset management specialist. Like questions, he knows the markets. He like fully understands, acquisition and even how to manage our deals. And our third partner is Brad Kenjamila with Crest City Capital. Brad is a luxury developer, and he has done over $132 million in transactions just in the last 5 years. So combined, this isn't just a team. Like there's like over 50 years of multifamily experience, which is we're all focused on one goal. How can we maximize your returns at Grove Park View? So this is our team. This is our partnership team. Now I want to talk you through who's managing the day-to-day operations. We have like a fantastic team on site. We have our asset living, which is our property management team. And then we have an amazing on-site team, and they are 10 out of 10. We're actually taking them from the current owners right now, and they're coming on board with us, and we are excited to have them. Between them, they have 75 years of experience between 7 of them. They know all the tenant needs. They really take care of the tenants just like their own family members. And we are so grateful to have them. And we know that like our tenants will be taken care of. Okay, so as I start wrapping up, I want to show you exactly where we are in the market cycle. There's a bunch of forces that are converging together right now. So interest rates have started to come down. $250 billion in institutional capital is getting deployed, plus our secured financing at 4.74%, which is significantly below market. I want you to kind of look at what's happening. While others are watching and waiting, the giants, think Blackstone, think Morgan Stanley, they are already moving. They are pouncing. They see what we see. Grove Park View, it checks all the boxes that they look for. It's stable performance, 96% occupied, premium school district location. There's proven rent growth. We've seen that. And there is a clear path to increasing the value. Here's the difference. They need billions. We just need to come together and act decisively. Our funding deadline is December 20th, but at the current pace and how excited investors are, we think that we're going to be fully subscribed before then. Again, you might be thinking like, the question you're thinking is that, is it the right time? You might be thinking, is this about timing? But I think it's a lot simpler than that. Do you want to be a part of this opportunity, or do you want to continue watching from the sidelines? Is this a time for you to start to make a decision and to come on board? I think that's the question you need to be asking. The investment process is very straightforward. There are 2 clear paths. You have one option, which is direct cash investment. And then, and in that path, it's pretty simple. It's as simple as it gets. You sign the paperwork, which I'll talk to you about in the next slide. You wire the funds, and that's it. You're done. Then we have a second option, which is that you can actually invest with your retirement funds. So you can use your 401k or your IRA. And no, you don't have to figure that out alone, because I know it's very confusing. We have a dedicated custodian team that will do everything for you. They handle everything from beginning to end, and we guide you through the entire process. All you just do is just make the decision. So I have some investors who were kind of, initially they were worried, and I would hear stuff like, I'm worried about the paperwork. It's too much. I thought it'd be complicated. I kept putting it off, but then they realized that like, we kind of, we bring a white glove service. So anything that you need, our team will take care of it. And you're just amazed with how simple that it works. So I want to show you exactly what the timeline looks like. So I want to be clear and kind of like let you know what our timeline is and where we stand. So since our subscription opening, it opened July 31st. Many of our investors, they have already secured their positions. These are investors who like from the beginning, they've been following us, they've been investing, they've been growing their wealth, they've been getting great returns, and they know our track record firsthand. So they invested right away, and we're tracking to be at 70% somewhere within the next week and a half. But I want you to kind of think like, what does this mean for you, right? Priority is going to be given to those who have completed agreements. So those who log into the portal, who read the subscription documents, who sign it, priority is going to go to them. So no verbal interest, no verbal commits, no, I'll think about it. It's time to just make a decision and commit. This is something that is rather critical about the timing. So 2024 is the final year for 60% bonus depreciation. I'll say it again, 2024 is the final year for 60% bonus depreciation. This is not our deadline. This is the IRS deadline. So if this is something that you want to act upon, I say do it now. So where do we stand? December 31st is our closing date. Our Class A is already almost 90% subscribed. So if you're thinking about that, you really should jump in sooner. And then, like I said, preferred positions are on a first come, first serve basis. So this is your opportunity to join the ownership group of an institutional grade asset. The time to do it is now. The time to secure your position is now. So I want you to realize that this isn't just about investing in Grove Parkview, right? This is also about building a community of professionals, people who understand what it means to build wealth that goes beyond our careers. And you're here because you realize how important that is. And so as a Pheenyx investor, you're getting more than just returns. First of all, you get complete transparency. So you're getting monthly insider investment updates. You know how your investment is doing. You're getting quarterly calls with our leadership team, just like really high level, walking through how the property is doing. And then you get priority access to like all our new opportunities. But this is what makes us truly different. As part of the community, you're also going to get, a network of high performing professionals. You get direct access to our strategic partners, and there's tons of like wealth building insights. We have our bi-monthly webinars that we put on, and that's really just to continue to educate you and make sure that like you understand what's going on from the financial aspect. One of our physician investors said this really well. He said, the returns are what really attracted me, but the community is what keeps me investing. And that's something that we're really proud of at Pheenyx. We're building a community of investors who, like, our sole mission is how can we grow wealth? This is, an institutional level access. This is professional grade networking. And this is what building real wealth looks like. So at the bottom of your screen, you're going to see a pop-up. The link is on the page, and then a pop-up is going to come up. So as we wrap up, this is exactly what next steps look like. Scan the QR code, or again, the link, I'm pretty sure the link is going to appear at the bottom. Process is simple. Fill out the information, and our team is going to reach out to you personally, and we'll guide you through every step. The steps are, you get complete access to the investment portal. All the due diligence materials are ready. If there's something that you don't see, or if there's a question that you want answered, please feel free to reach out to us and we'll get that answered right away. We're standing by for any questions that you have. Decide what investment class you want to invest in, complete the subscription documents, and then lock in your allocation. Like I said before, secure your spot because positions are filling up very quickly. The preferred class is on a first come, first serve basis. And our team is really excited. We're really ready, like including me, to walk you through every step. And we have helped hundreds of busy professionals just like you make this transition. We've answered questions. We've started to help them grow their portfolio just like you. So the paperwork is ready. The question is, are you going to decide to do it today? I want to leave you with some final parting words. So before we close, I want to ask you something personal. I want you to remember why you started this journey. The countless hours, the sacrifices, the dedication. It was all for a better life for you, for your family, for your future. But here's the truth that we all face. no matter how exceptional you are in your career, no matter how many extra hours you work, you will still be trading time for money, and that has limits. Right now, this moment, you're standing at a crossroad. Continue depending solely on your career income, or join professionals who are ready, who are already securing their share of that 250 billion wealth transfer. The choice is yours. Right now, for Grove Parkview, our investors are positioned to make about $15,500 to $18,000 in annual passive income. It looks like $27,000 in year one in tax savings, all while excelling in their careers, all while building seed capital. But the time is closing in. I told you that we're already about 70% subscribed, and this is the last year for 60% bonus depreciation. And I reminded you already that like institutional giants, they are already acquiring this asset. So next time, if you're missing a family dinner or if you're taking a late night call, just ask yourself one question. Are you working because you choose to, or because you really have to? This isn't just about Grove Parkview anymore. This is about your freedom. This is about your family's future. This is about how hard you've worked and what you have worked to create. We are standing by. The paperwork is ready. The team is waiting, and the opportunity is now. Again, I'll ask you, what would you like to do next? This time, I want to say thank you for your time. Thank you for hanging out with me. I will stop right now and I will answer any questions that you have. Thank you so much. Okay. Let me go to questions. Okay. Questions. And if you have any more, just keep them coming. So Ramon said, I'd like to hear more about the investment classes if possible. Okay, so there are three investment classes, which is Class A, Class B, and Class C. Class A is a $100,000 minimum, and that's 10% preferred return. So, and then Class B is $50,000 minimum, and that is 6% preferred return with an 80-20 split. And then Class C is the $750,000 minimum, and that is 7% preferred return at a 90-10 split. So those are what the three classes look like. And I mistakenly started. So Ezzy said, are you planning to sell before the 5-year arm is up? Great question. So I'll answer that question in a few different ways. So the first, we look at the deal. So on a yearly basis, we look at the deal. We have a broker opinion of value to kind of see how our deal is doing in terms of market. If we meet our business plan early, we will decide to sell. That's if we've made what we promised our investors, we'll decide to sell. But if not, we will hold it for 5 years, because it will take about 1.5 to 2 years to execute our business plan, which is to build, which is to renovate those 105 units. So it'll take about that long. So we can hold it for 5 years with a solid interest rate of 4.74%. If we have to, we will, because it's really good. So Ramon, I answered the question about the investment classes. So I will do, yep. Okay. IJ said, can you briefly explain the investing with an IRA to me? Okay. So for the IRA arm, right, you can use, this is a private security. So you can either use your old 401k, or if you have an IRA. So if you have an old 401k, let's say you left your prior employer years ago and it's been sitting somewhere, you can convert that into a self-directed IRA, and then you can invest through that. Or you can have your IRA. You can also convert your IRA into a self-directed IRA and invest through that. So you have multiple options. And we, like I said, I don't know if you heard me, but we will take care of all of this for you. We have a custodian that we work with, and so we can take care of that. And if that's something that you want, our team will definitely reach out to you and we can get the process going. Okay, so asked again, I have another question from IJ. She said, how does one qualify? Great question. So in order to qualify for to invest in Grove Parkview, you have to be something called an accredited investor. And that means that you have to make $200,000 annually, and you have to have made that the 2 years prior, or you and your spouse together, you have to make $300,000. So that's one way. You also can have $1 million or more in net worth, and that is going to have to exclude your private residence. So either of those components will make you an accredited investor. And if you are, then you can 100% invest. And question again is, what is the minimum investment? Minimum investment is $50,000 is the minimum investment. When you sell, another question, when you do sell, how's the profit distributed? Great question. So remember when I explained those 3 classes, right? So the first class, which is class A, they will not get any part of the profit share. They will only get what they had been getting throughout the whole deal. Class B and class C, they will get part of the profit share. So the profit share split is 80-20. 80% will go to you as the investor and 20% will come to us as the partners. And then in class C, with a larger check investment, 90% will go to you as the investor and 10% will come to us. So that's how the profit is split on the back end. These are all really, really good questions. Does anyone have any other questions? You're very welcome. I just want to make sure that I was able to answer all the questions. Okay. Okay, I'm going to give it a minute. If anyone has any other questions, please toss it in the question bucket or in the chat. I'll find it and then I can answer your questions. Okay. If there are no other questions, thank you so much for spending this hour with me. And for all of those, once again, the QR code is on the screen. If you fill it out, it's very simple. One of our team members will be in touch with you within the next 24 hours. Okay, on that note, thank you so much for your time and have a great evening. Loved the information, gave me a lot to think about. Thank you for your time. You're very welcome. Bryce is typing. You're welcome. Okay. Have a great evening, everyone.